makes a really comprehensive bull case for Rigetti computing. It highlights those big analyst price targets, we're talking $35 to $50, and grounds it all in their quantum roadmap and that very substantial $600 million cash position. Let's jump right in. The material does a great job arguing for those targets by pointing to Rigetti's timeline. You've got the 336-qubit Lyra system, then the 1,000-plus qubit system by 2027. The whole argument is that these targets are solid because Rigetti is just hitting milestones on a very clear roadmap.
Okay, and that's a strong starting point. But, a truly robust analysis needs to explicitly connect those specific technical milestones to the quantifiable financial impact that actually justifies a $35 or $50 stock price.
The quantitative bridge.
Exactly. It's not quite enough to just say the targets are based on the roadmap. We need to see the math. And that's where there's a bit of a gap right now. The report asserts the link, but it doesn't really quantify how completing a specific system, let's say the Lyra 3368-qubit system, translates into the actual revenue or market share needed to get to that valuation.
Right, it feels a little abstract. You're sort of taking Wedbush's or Mizuho's word for it.
You are. And that leaves the thesis vulnerable. It shifts the burden of proof to an outside party, when what you want is to build an unassailable case from the inside out. So the suggestion here is to integrate a clearer model-based projection. It needs to outline the expected commercial adoption or maybe the contract sizes that are necessary at each major hardware milestone to really validate those bullish targets.
That makes sense. You're shifting focus from just external confidence to something that's, internally verifiable.
Precisely. It makes the whole thing much harder to poke holes in.
Let me push back on that just a little, though. Modeling revenue for quantum is notoriously hard right now. The market is still so nascent. Are we asking for too much detail?
It is challenging, I agree. But that difficulty is exactly why providing any reasonable quantitative estimate, even with caveats, adds so much credibility. For example, for that long-term $50 target, you could do a sort of back-of-the-envelope calculation.
Okay.
Estimate the total addressable market, the TAM, that Rigetti would need to capture just with its 1,000-plus qubit system to hit that market cap.
Ah, so you're working backward from the target?
Exactly. The exercise isn't about getting the number perfect. It's about demonstrating that you understand the mathematical hurdle. What kind of commercial contracts would they need by 2027 to make that $50 share price a reality?
That makes the long-term goal feel much more concrete. What about the near term, that Wedbush $35 floor?
A great question. For the more immediate argument, you could detail the expected average selling price, the ASP, for access to the current Novera QPU. Then you could model the number of cloud customers, or say government contracts they'd need in the short term, to validate that floor.
So if you need, 50 high-value customers or a couple of big government contracts to justify $35 by 2026, you just state that.
You state that, and suddenly the technical achievement is tied directly to a commercial reality. The target is no longer just an analyst's opinion, it's a checkpoint based on sales.
Okay, that definitely strengthens the core argument. Let's shift over to the financials. This part of the report is compelling. It positions Rigetti as a financial fortress. And that $600 million in cash with almost no debt is a powerful point.
It's a fantastic anchor for the bull case, no question. I mean, it's a massive war chest in this industry.
Especially against the bear argument that it's just a cash-burning spec stock.
Right, but that massive runway and floor of safety argument, it could be made so much stronger by just introducing the company's actual quarterly cash consumption.
The burn rate.
The burn rate.
So what's the weakness in just presenting the big cash number?
Well, it's like telling someone you have $100,000 in the bank, but not mentioning your monthly expenses are $10,000.
Yeah, okay, I see. It's an incomplete picture.
It's a very incomplete picture. The analysis successfully presents the huge cash reserve, but by omitting the burn rate, it leaves the actual length of that runway totally open to interpretation, and that just lets the cash-burning narrative hang around.
You're basically giving the bears an open invitation to fill in the blanks with the worst-case scenario.
You are. And the fix is so simple. The suggestion is to just explicitly state the approximate quarterly cash burn and then do the math, calculate the exact duration of the company's runway.
And that turns a qualitative claim into a hard number.
An unassailable quantitative fact. For a concrete example, you just look up the net cash used in operating activities from the most recent quarter. Let's just say, for argument's sake, it's $50 million a quarter.
Okay.
If you state that $600 million cash pile next to a $50 million quarterly burn, you can then say, point blank, the company has a calculated runway of 12 quarters.
3 full years.
3 full years, with no need for additional financing. That statement immediately slams the door on the cash burn argument. It makes that financial fortress claim tangible and mathematically defensible.
That's a powerful addition. Okay, last point. Let's talk about the competitive positioning. The analysis report argues that Rigetti is a pure-play leader in the hybrid quantum classical space. The focus is very internal, on their own execution.
And it makes sense to focus on your strengths, but that claim of being a pure-play leader, it really needs to be validated against the current competitive landscape.
You can't be a leader in a vacuum.
You can't, and that's the central issue here. The analysis operates in isolation. It's all about Rigetti's qubit counts and roadmaps, but it doesn't acknowledge or benchmark against the industry giants, IBM, Google, or even specialized competitors like IonQ.
And the risk there is that it makes the thesis feel a bit naive.
It's twofold, really. First, it can suggest a narrow view of the market. Second, it leaves the investment case open to external risks, like what if a competitor leapfrogs them, or what if their whole architectural approach gets overshadowed by, say, rapid advances in trapped ion tech.
So how do we fix that without turning the whole thing into a huge market survey? We want to keep the focus on Rigetti.
You don't need a 20-page report. The suggestion is to just briefly introduce some competitive context. Compare Rigetti's specific niche, that superconducting and the hybrid quantum classical approach, against one or two key rival technologies.
So you're not tearing down the competition?
Not at all. You're reinforcing why Rigetti maintains its leadership advantage in its specific lane. You're validating their strategic choices.
And you mentioned their hybrid focus. That seems to be their key differentiator.
That's their moat. So for a concrete example, you could add a short comparison showing how Rigetti's Novera QPU and its hybrid approach is different from a major trapped ion competitor. Maybe you focus on error correction or how it applies to near-term problems. You justify why their architecture is the right choice for the market they're targeting right now.
And that would be very powerful. Another option could be to validate that leader claim by comparing their timeline against a major players.
Yes. Compare the projection for Rigetti's 1,000-plus qubit system by 2027 against, say, IBM's stated goals for that same time frame.
So you're not just taking their word for it?
You're benchmarking it. It turns Rigetti's roadmap from an internal boast into a market reality. If they're keeping pace with the biggest players, it reinforces their technological relevance. It helps explain why a $50 target is actually plausible even with all that competition. It proves they're in the lead.